yes, indeed, that relief rally did play out on Wall Street, and that's hopefully the cue that we should be piggybacking on. But for our markets yesterday, while the attempt to pull back was very evident, 17K still didn't really make it as we wrapped up sub that mark, with the broader markets as well seeing a cut of about 1%. Lots to take cognizance of. The fact that we have seen the broader markets, global markets rather, staging that relief rally. You had the Dow, which rallied about 380 points. The S&P 500 gained about 1% or so. And this coming in a day after that forced action or takeover of Credit Suisse by UBS, and also the news that JP Morgan will be advising First Republic Bank on strategic alternatives. So while the banks bore the brunt of the selling pressure, for the rest of the markets, you did see that rally play out. For the Asian screen this morning, you do have a little bit of a mixed basket. For example, the Nikkei is down about 1.5%, but the rest of Asia holding out in the green, and that's the SGX Nifty as well, indicating that it could be a potential positive start for our own markets. But there's a lot that we're digesting and looking forward to as well, Nikunj. The fact that there is going to be the Fed meet later this week, whether or not they're going to pause on those rate hikes remains a huge question mark. And we've seen crude oil prices as well go sub that $70 per barrel mark. Gold is rallying as well.
Yeah, it's a disjointed world, Avan. Yeah. Gold, Bitcoin, crude, expectations from US, FOMC. Frankly, next 24 hours and 48 hours, the entire narrative would be centered in and around what indication we will get from the US Fed. If the US Fed increases interest rates, then the concern is that that will only have an impact on the bank's balance sheet because of M2M losses. But that also is an indication that US Fed feels that the US financial system is resilient to digest another rate hike. But if they don't increase interest rates, that also could be a signal that the US financial system cannot absorb any more rate hikes. And despite high inflation, they've been forced not to consider a rate hike. So really, depending on whom you are asking, you will get a very different kind of positioning. When it comes to specifics, I don't think the storm really has come and gone. In fact, if you ask me, the storm in Mumbai just arrived this morning. It's cloudy and it's raining. We'll talk about it. Very unusual to have rains, at least in the month of March, but it's raining. So really hinges on the next 2-3% move for global markets will be a function of the Fed commentary. And there you go. Yeah, it's Mumbai for you, my friends.
It's March, Nikunj. Who would have thought that we'll be taking out our umbrellas in March? As that's the scene that's playing out. Do remember the IMD had spoken about some showers in New Delhi, etc. But that orange alert in Delhi, but perhaps Mumbai, that's come as a bit of a surprise. What didn't come as a surprise is the fact that we didn't really manage to stage a rally yesterday. If we can pull up the intraday chart of the index, because 17K still eluded us. The broader markets did come under pressure. A lot of the rate sensitives felt the heat. We were 140 points off the lows, though, by the time we wrapped up. But the net selling from FIIs, that continues to remain 2,500 odd crores. You had FMCG as well as that really managed to stand out in an otherwise dull market. So, for example, HUL, ITC have been the top gainers. And as I said, high beta really came under pressure. So metals were the top losers. Global growth concerns continue to plague, and banks really bore the brunt of selling. But Nikunj, yesterday actually, Kunal was talking about this fact that maybe things are turning around with the fact that at least defensives are now seeing a bit of a pullback. Otherwise, they too came under the tide of selling pressure. The fact that they're managing to hold out gave us a bit of glimmer of hope yesterday, at least.
So, Avan, you have to understand that there's a compulsive part in this market, and the compulsive part in the market is perhaps centered around the fact that FIs are selling not because they want to sell, but they're selling because they've got redemptions or they've got compulsions to sell. So the price action, let's say in a Reliance or off late what we've seen in HDFC Bank or even for that matter TCS, this really smacks of the FI selling. FI short selling right now is at a record high, which means the positioning of the market is such that either FIs are selling in the cash market or their positioning is in the F&O market is at a record high. So that just tells you the kind of nervousness, stroke, the anxiety, or the entire pattern is there by foreign institutional investors. Now, what do you do in this kind of a market? Well, you will typically see that from high leverage plays, which is financials and infra, markets will migrate back to companies which in a sense have strong cash flows and give you visibility for next 2-3 quarters. And given what's happened to commodity prices, I guess there is a rotation rally which is visible in commodity consumers. So the HULs and the Nestles of the world may see some more outperformance, given that A, they are defensives, B, commodity decline I think is real, and C, the incremental benefit of some of these companies after 2 years of drop in commodity prices I guess is real. All commodity producers have benefited in 2021 and 2022. I guess the reverse trade clearly is at play now.
Yep, that clearly seems to be the case. But let's talk about index levels then as a whole and just try to understand what exactly the word is from leading brokerages. For instance, BofA has come about and they've cut their Nifty year-end target. So earlier it was 19,500, pardon me. Now the target on the Nifty has been reduced to 18,000. In fact, the categorical word is that one should look at buying the Nifty at around the 16,000 mark. The lower range of the Nifty is 16 to 18,000 and flat returns in CY23 are expected. Valuations as well are close to the long-term average according to BofA, and they've also said that the Nifty is still overvalued versus emerging markets as well as debt, saying that a 6% correction to Nifty will make it attractive in terms of buying for a dip. And looking at the Nifty, Nikunj, in terms of buying levels, BofA is talking about how a 6% correction would make it attractive, and they've clearly slashed their target prices. Do you think that, a slew of other brokerages will come ahead and do the same?
The series of earnings downgrade has started. If you remember, when we started the year, every brokerage, in a sense, the consensus view was that 2033 would be a flat year, a year with no returns. Now there is a markdown, and BofA ML is the first brokerage which has come with a markdown. Now, there is a belief in the market that typically when the brokerage cuts they start, that means that we are nearing the end of the decline, because brokerages in a sense are indicating what markets have already priced in. Frankly, if you look at the market price action this year, has been on the weak side. Benchmark indices are down about 10% in absolute terms, in double digit in dollar terms, which means Indian markets are no longer the expensive market. And in terms of the positioning of historical averages versus the current level, we are not far away from its long-term historical averages. Will we go there? And should one wait for it? I guess that's anyone's guess, simply because you cannot preempt in the near term, because of the compulsions in the global market, what kind of price action we should anticipate and expect. But yes, this is the first big brokerage downgrade which has come. It really could be first of the many brokerage downgrades which will come, because what assumptions were at the beginning of the year, let's say Jan 2023 versus March 2023, there is a sea of departure. Having said that, somewhere we need to be cognizant of the fact that crude is down, down, down and down. That is something which needs to be factored in going forward.